Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Procter & Gamble has long been a stalwart of the market, but the company has actually underperformed the market for the last decade. And there are a lot of challenges that Procter & Gamble is facing that it's just never faced in its history. So I want to go through a few red flags that investors should be looking at. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, in the show notes. And the first thing I want to cover is Procter & Gamble's margins. This is a chart of Procter & Gamble's gross profit margin going back to 1990. And you can see here that there was a pretty sharp increase in gross margins between 1995 and about 2005. Since then, actually since about 2010, gross margins have just been in kind of a steady decline. It's not a consistent decline. There's up and downs in any given quarter, but there's clearly not a lot of extra the company can squeeze out of the business. And I think this is fundamentally the challenge, is that Procter & Gamble makes a lot of commodity products. It's a consumer staples company. So these are products that people have to have, but they don't necessarily have to have Procter & Gamble's products. They can have anybody else's products, anything that's on store shelves. And now with online shopping, that opens up a lot of other opportunities for people to buy things. And that gets me to the second concern, and that is the company's distribution power. This is a chart of Procter & Gamble's revenue going back to the mid 1980s. And you can see that there was a lot of growth in the 80s, 90s, and the 2000s. And then since 2010, the company has essentially been flat. Now, there have been acquisitions and divestitures, so there's a lot of nuance going on there. But the broad theme is that distribution power is simply not what it used to be. Companies like Procter & Gamble used to be able to get their way into large big box stores, even small retailers, and they could essentially muscle out any sort of competitors that came along. A small brand just didn't have the money to get shelf space in a lot of these retailers. That's not the case with something like the internet, where a small brand can grow by doing something like Facebook ads, building a Shopify store. Competition is simply completely different than it was even just a decade ago. And that has really eaten away at a company like Procter & Gamble's pricing power. The short story is that demand has gone from suppliers like Procter & Gamble to consumers. And that's why we see slowing revenue growth and worse margins for Procter & Gamble. The third thing that I want to look at, and this is kind of an overall concern, is Procter & Gamble's debt. $37 billion worth of debt. This is not debt that has increased much over time, but you can see it's a very large debt number. And given the fact that interest rates have been very low for the past decade, Procter & Gamble has not had to pay very much interest on that debt. But as interest rates go up and any debt that needs to be refinanced comes due, Procter & Gamble's interest expense is going to increase. So now you combine the slow growth that I talked about earlier, the margins potentially facing more pressure, and now there's going to be costs associated with this debt with increased interest expenses over time. So that means that net income is going to get squeezed just because of these three trends converging on each other. I think this ultimately puts Procter & Gamble in a much more difficult position than investors are thinking right now. The stock trades for about 25 times earnings. That's a very high multiple for a no-growth company that doesn't have a lot of opportunities to grow the bottom line in the future. But what do you think about Procter & Gamble? Let me know in the comments section. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.